We think we're on the front end of a growth curve, especially as it relates to two of our divisions, Chesapeake Payment Systems and Flexent. We see tons of opportunity there. Both of those two divisions are national in scope, not within our trade area.
All right, welcome back inside our proactive newsroom. And joining me now is Jeff Sapersky. He is the CEO of Chesapeake Financial Shares. And Jeff, it's good to see you again. How are you?
Nice to see you too, Steve. Thanks for having me today.
Yeah, so the company out reporting strong Q3 earnings and your dividend increase as well. We'll get to all that in just a second, but overall, you're fairly happy with what you're seeing. It was I don't want to say a big turnaround, but certainly was much more positive than the last time you and I talked.
Yeah, it was good. It's nice to actually have a rate decrease come down from the Fed. Granted, it was only 50 basis points. They raised 550 basis points, but I think the psychological effect of a decrease at least calmed the markets a little bit and helped us with prospectively looking forward at our net interest margin.
Yeah, where did you see the strong parts of the company in this particular quarter?
We continue to have a solid loan growth, Steve. And that is not the norm for community banks, especially within our market. We are keeping our same credit standards, but we're getting more than our fair share of new commercial loans. I wouldn't say it's robust, but it's better than peer, and it's continued throughout the year. It's slowed a little bit through the year, but most community banks have gone to zero loan growth through the first 6 months, and we're at about 8.1% loan growth in the first 9 months. So we're pleased with that. That's in this market, that's exceptional.
I guess sometimes, Jeff, that could be a bit of a challenge, knowing that you're outperforming your peers, but not seeing it in the market itself. That can be you kind of have to sort of say, understand it, but not let it affect you as much.
Yeah, that's a good point, Steve. Our price earnings ratio is lower than market. Our PE ratio as of when I wrote the press release was 9.79. Our peers are anywhere in the 11 to 12 range, some even higher. So given the consistency of our earnings, the 32 consecutive years of our dividend increases, we've done that through the 99 crisis, the 08 crisis, the pandemic. We've increased our dividend through all of that. So I think it's a testament to our stability and our ability to generate earnings even in a tough environment. But we do feel that we're not necessarily being rewarded in the market to the measure that we feel we should be.
Yeah. You mentioned the raising your dividend, 32 consecutive years you've been able to do that, including this one as well. Tell me a little bit about the road ahead now. It looks like financial year is going to be a pretty strong one once again for the company.
It's going to be a strong one, Steve. And we're looking way past 2024. We just came out of our strategic planning. We do that every year. We are seeing, we think we're on the front end of a growth curve, especially as it relates to two of our divisions, Chesapeake Payment Systems and Flexent. We see tons of opportunity there. Both of those two divisions are national in scope, not within our trade area. And so we serve a really unique niche there that we've been doing for 27 years, and we feel we do it well. And we think the next 3 years is a chance to parlay that into higher profits for Chesapeake Financial Shares.
Well, congratulations on it. I know it's been a lot of hard work getting through what the Fed's been doing and trying to deal with that. And Jeff, I really appreciate your time and sharing the information with everyone.
Steve, thank you so much. Have a great day.
You as well. Jeff Sapersky, the CEO of Chesapeake Financial Shares.